This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. My guest today, his second appearance on this show, a man with tremendous trading insights. Mark Minervini is here today to discuss his newest book, Think and Trade Like a Champion: The Secrets, Rules, and Blunt Truths of a Stock Market Wizard. And I'm a little bit jealous here because I'm not very comfortable with it, but I got to give Mark credit. He's got his picture right there on the front cover. Don't you know that you've just arrived when you put your picture on the front cover? I have to get a book with a picture on the front cover. It's not fair. Congratulations, Mark. I'm jealous. I want the same damn thing at some point in time. All that aside, my personal whatevers aside, I'm happy to have Mark Minervini on this podcast for the second time. The naturally gifted. This has been one of these debates for decades in the public consciousness. And I still think if somebody sees, let's say someone sees, they see your book, they see your picture, they see Investing Champion, they see the success, the accolades, a significant number of people will just immediately assume he's natural. He was born with it. What they don't see is the practice, and what they don't see is the process. I know I'm not off base, but give me your perspective.
Like I've told people many times, I was an unnatural. For me to hear somebody think that maybe I had some natural ability is really kind of funny, because I went 6 years without any profits. As a matter of fact, I was at a loss after all that time. But I did believe that if I learned the process and I got the process down, that the results would take care of themselves. But as far as naturally gifted, the thing is that sometimes you have someone who actually is naturally gifted at something, and they don't do nearly as well as somebody who's not gifted, because they're gifted and it comes easy, and they don't work as hard. And also a big part of this, and it's something that I'm trying to teach now at my workshop to people, is that a lot of it has to do with your self-image and your belief system. So, for instance, if you held a belief that was in conflict with what you were doing, you probably wouldn't be successful, even if you had all the knowledge, you had all the tools. So you get this inner conflict. So it's real important that you believe in what you're doing, and what you're doing is congruent with what you believe. And also, I've been studying some and listening to some coaches that coach Olympic athletes. Basically, what I've learned is that your performance is only going to go up as far as your self-image. Even if you have all the talent in the world, if you don't think that you can perform at a certain level, that's the level that you're going to perform to. So I'm not really, I don't believe in naturally gifted necessarily is going to beat somebody else who maybe starts off slow and has to work harder for it.
That's 6 years. That strikes me. 6 years is a long time to not find measurable success. And perhaps you were seeing measurable success, except maybe just not in profits. But still, 6 years in the investing trading game to not see profits. I think if anyone's paying attention, hopefully they are, their first thought has to be, how did you keep going? Why did you keep going?
Well, once again, that's one of the traits of a great athlete, or an Olympic athlete, or someone that ends up being a big success, is usually what keeps you through those times, or I wouldn't say usually, pretty much all the time, is a passion for it. So you have to be doing something that you not only have maybe a passion for, but is a priority, and that you have a vision. You have a bigger vision. Really, what it comes down to is putting the process before the results. And I talk about that. In my new book, I talk about the builder versus the wrecking ball, meaning that the builder is the process-driven one that feels if they get the process right, the results will take care of themselves, and they just keep working on the process, working on the process, working on the process. The wrecking ball is the one that, when they don't see the results right away, they try to make changes, but then if they don't see those results, they either quit or then maybe change their strategy, or maybe someone who tries one type of sport and tries a different sport, maybe you'll end up finding something that works. But yeah, nothing's going to work really quickly, no matter what. I often tell people, if I walked into McDonald's and they said, "Hey, go and work the fry machine," I wouldn't know how to even turn it on. It's not because I'm ignorant. It's just I lack the knowledge. So something as difficult as trading, to be really good at it, isn't going to happen overnight. So regardless of where you end up stopping, you're going to have to put some time into it.
Did you start as a builder? Was your personality as a builder, or did you start? I think we all kind of start with a little wrecking ball here and there. Maybe some people are more prone to being a builder, but how did you start out as your personality as you got into the trading game?
I think I naturally was a process-driven person, but I definitely had wrecking ball traits where I would, I certainly would blow myself up from time to time. That's why I didn't get anywhere over 6 years. I'd have success, and then I'd hang on to some stocks like, everybody does, and fall in love with something, and the next thing you know, it's down 20, 30%, and then that would hurt my results. I had damage like a wrecking ball, but I think I was originally, if there's maybe something natural that I had, is I think I was process driven right off the bat. I always really put my head down and worked on getting the process right. And I have a vision. I've always had a vision. I've always been able to see far out and work towards it. Maybe that's something that's, comes a little more natural. I'm not sure. I don't think I was taught that.
Let me stay in that 6-year window for a second, that 6-year non-profitable window. What were you telling yourself to keep going? What feedback were you getting that was keeping you going? You must have been feeling or seeing incremental improvement in some way that maybe was only measurable by you, but there must have been some incremental improvement that kept you going even though the profits weren't there.
I'm really big at what I call eliminating excuses. I'll just give you a quick, for instance, I'm a amateur photographer, but I take my photography pretty seriously. But I went right out and I bought the best cameras, the best lenses, the best of everything, not because I thought that the best lens or the best camera would make me a better photographer, because it won't. If you're a good photographer, you could. I have a friend of mine who's a photographer. He takes amazing pictures with an iPhone because he understands composition and lighting and so forth. But I just wanted to be able to remove all the excuses, so I couldn't say, well, that came out better. That guy's picture came out better because he's got a $1,200 lens. I've got this crappy lens over here. So I just remove, all the excuses, and then it's on me. So it may sound hokey, but when I was a kid, most of us saw, Rocky. And if some of you might remember in the movie Rocky, where, his trainer, Burgess Meredith, he says, he's just a man, Rock, be more man. I always remembered that and said, okay, so if there's people out there doing this and I have the same tools as them, well, then it's obviously possible. The problem here is I don't have the experience yet. So I was always able to take that responsibility, I think, and know that I just need more. I need more time, And I have another trait that I think is somewhat natural, is that I have an unconditional persistence. Like, I'm going to commit to something and I just don't know the word quit. So that may be good or bad in some instances. In my instance, it ended up turning out good over a number of years.
I think I used to do that in the early days of computing. I would do the same thing. I'd want to have the software, the best Mac on my desk. It's almost like a mental tool. And as I hear you talk, it's almost like if we're talking photography, have the best equipment, and then you're going to reverse engineer yourself to figure out how it all works. But if the best stuff is there, you're creating almost like a mental tool that just says, no, Mark, there's no excuse. If you're going to do this particular task or profession, there's no other excuse. And clearly you must have known or seen this or learned this, that too many people out there do exactly what you're talking about. They blame it on everything else under the sun.
Well, yeah. Well, of course, our ego wants to protect. We don't like, we look at responsibility as blame, as opposed to what it really means to be responsible is to cultivate the ability to respond effectively. So, if you start blaming, then, you're disempowering yourself. You're not taking responsibility, and you're not empowering yourself. But by taking responsibility, you're saying, I'm in control of this. It's just a matter of choices. That's something that, I spent a lot of years. I mean, I've been to many Tony Robbins seminars and lots of other seminars. I've been to probably 50 or 60 seminars. I've been to Tony Robbins 9 times. Jack Robbins, Tony's son, was was my co-instructor last year. And so even to this day, I'm learning, and I read, and I listen to CDs and so forth on a regular basis. So I'm big on self-improvement, self-actualization. That's really, it's all about just taking responsibility. You can do it. You just have to believe in yourself and realize, again too, would you go to law school for 1 year and then go into a courtroom and try a major murder case? Or would you go to medical school for 2 years and come out and try to do a brain operation? It would be ridiculous, right? But somebody goes into trading and they think in a year or two they're supposed to be a really great stock trader. Well, I don't understand why trading gets such disrespect relative to other professions, but I think trading's harder than those professions. So it takes time, and maybe not 6 years, but then again, back when I first started in the early 80s, I think 83, 84, you didn't have access to the kind of information that we have now, and the with the social media, and just there's so much more. The learning curve has definitely been shortened.
Yeah, there's almost information overload now. And so unlike perhaps when you were getting started, the way that you would search for information or find a mentor would be entirely different than today. But people today also with too much information, I think I see so many folks, they don't know what's right or wrong. Even when they have all the information, they can't decipher it.
Well, that's the flip side to having a lot of great information, is you also have a lot of bad information. Yes, you've got to cut through all the noise. In all honesty, when back in the day when I first started, I had not much information and not very good information. So at least now you have a lot of good information along with the noise. Back then, there wasn't really any information. I'd go into libraries, and try to find books, and the books were so outdated. You would get books that were 30 or 40 years old on techniques that never worked in the first place, let alone, working up to date. So it was very, very difficult. And you just had to, trial and error was what, you really went by, and it was very costly to do trial and error back then too. Commissions were, $175, $200 a trade. Spreads were $3, $4, $5, $6. You'd buy a stock at $16 offered, it would be bid 12, so you'd be at a 4 or 5 point loss right off the hop. It was much. People say trading must have been easier back then. It's hysterical because it's 1,000 times more easier now. Back then it was very, very difficult to trade effectively.
As you mentioned Anthony Robbins, it's funny you say that. I was thinking as I was going through your newest work, the first 20 or so % of the book, and I felt that I love this, frankly. I put a lot of this stuff in my own world as well, but I think self-help is sometimes a little bit not the greatest phrase, but I could feel that kind of enthusiasm coming from you. Whereas in this book, in the latter 60 or 70%, you get into technique and examples, but you start this book, frankly, with a discussion of you and you inside, you, the mental, the psych perspective. That's where you started.
Yeah, I did the same thing in my first book, and I probably went a little overboard in my first book because it's not a book on that subject. It's a book on trading. I really felt it's really important to start with that framework. And then in this book, I wanted to make it a little more commercial and a little easier to read, a little less maybe voluminous or overwhelming. So I cut it down a bit with that. But yes, there's still that element. It's probably the next book I'm thinking about being approached to write another book that's more on just winning and building a championship mindset and so forth. So, and then again, in this new book too, at the very end, I don't know if you've got to see that yet, but myself and Jarek, we had a conversation prior to him doing my Master Trader program. We prepared for it. During that time, I basically took the conversation that we had to prepare for it, and when I looked at it, I said, "Wow, this is really phenomenal." And I asked him, I said, "Can I, I like to put this in the book, just stick it in the end of the book because it's got some really great stuff in it." So I
saw you were going the NLP direction there too, which is something I've loved to talk to. I've talked to many folks, and you can see the Anthony Robbins influence there as well.
There's technologies that are much more advanced even than the original, NLP techniques that, Anthony started with, and Jim Rohn, going back many years ago, who was one of his mentors, taking it to new levels now. And like I said, I've been studying how Olympic athletes train, and some of these people that are at the highest level of performance and concentration. And there's some really great things and some techniques to use, and I'm going to get into more of that, and maybe in another book. Like I said, we'll get into that and how to really the mindset. Really, when you talk about trading, we're all looking at the same names. Who someone subscribes to a service and they run screens and 400 or 500 names come up and they narrow it down. They're looking at stocks that are breaking out of bases and have high relative strength and good earnings. It's only going to come down to a handful of maybe a 50 or 100 or a few hundred names that meet that criteria. We're all looking at the same names. So what's the difference between someone who performs at a really high level and someone who doesn't? Well, first of all, it's the timing of those names, and that has a lot to do with your perception, and also it has a lot to do with the things that we were just talking about. How can you make it through the learning curve? Can you stick through the tough times? Can you make the tough decisions and cut your losses and go through whipsaw environments? There's a lot. There's so much more to it than just the charts and the earnings and having the tools. Everybody wants the tools. The thing that
mindset is one of those tools.
Mindset's the most important tool. It's the one that basically decides it all in the end. So it doesn't really matter how talented you are. You could be the most talented basketball player in the world, but when you go on the court, you freak out and you panic and you don't perform under pressure. So it doesn't matter that you're talented, because it matters in how talented you are emotionally as well.
Let me keep you in the psych side of the equation for one more point. Then I want to move into trading principles that I think are very important in your newest work. Choosing to win, choosing to lose. It's such a simple handful of words. What? 6, choose to win, choose to lose. 6 words. It's so terribly important. And I'm betting there are a significant number of people that will listen to this conversation at some point in time, and they might dismiss it out of hand. What do you mean choose to win, choose to lose? Everyone chooses to win.
No, everybody wants to win, but that doesn't mean they choose to win. Choosing to win means that you make the commitment, you're going to do what it takes, and you're going to make it a priority. Wanting to win usually means that I'd like to win, but I'm not necessarily committed to winning. What I used to do with guys that worked for me is, in the beginning, when they first came, and they were traders in the beginning stages of their employment, I would say, write down everything that's really that you want, that you want to, all the things that you want to accomplish, and write everything down. And they would say, okay, I want to be, great trader, have a big house and boat, car. Most of it would be materialistic, and then I'd put that away, and then like 3-4 months later, I'd say, I want to do a little exercise with you. I want you to write down everything that's most important to you in your life. The things that are the absolute most important and the priorities in your life. And then it would be, love, my family, my daughter. What happens is you take those 2 lists, you put them side by side, and on one side, you have all these things that they want in priority order, and then on the other side, you have nothing on the other list that's actually the things that are really important to them. There has to be the things that are important to you have to be on that list matching up, or not that you're going to put, trading ahead of your daughter or maybe your wife or your family and so forth. But I kind of did, because I waited to get married and I waited to have kids until after I put a lot of years in trading and became successful. I made that decision. I made the decision that it was more important for me to spend time on my career and to become successful before I had a family, so then I could spend the amount of time with my family and provide for them what my mother and father couldn't provide for me. So I actually did make that decision. But point is that, the difference between passion and priorities is what's really important. You could be passionate about something. That's the first principle. Do what you're passionate about. Okay, but is it a priority? So yeah, I'm passionate about it. There's somebody who loves to play music and maybe might be a great piano player or a bass player, but is that your priority? Is that what you're trying to make your career out of? Or are you working a job and then you go and you play, as a hobby?
You are really driving at the issue of sacrifice. And I can think of a great quote that I put in one of my books from Jim Rogers. I'm paraphrasing a little, but he essentially said, look, if you want to run the 4-minute mile, be the Kirov ballerina, make your first million in the markets, the wife and children are hostage to fortune. Of course, there's no absolutes in this world, and there's shades of gray on everything, and there's a bell curve, and there's outliers. But I think he makes a point, and it buttresses your decision-making. And I would love for you to explain your decision-making, because plenty of people could be listening and saying, my gosh, that sounds intense, that Mark, I relate to it, frankly. That's why I'm also saying this. But it sounds intense that Mark would make the relationship delay or the family delay based on career. But I don't think anybody has figured out yet when it comes to sacrifice. I mean, if you really want to be, frankly, considered at the top or reach the top or have a very good run, how do you not sacrifice? You got to sacrifice something.
Well, sacrifice is probably the most important word that you can have in just about anything that you're going to attain something that's worthy. I talk about sacrifice a lot too. That's another thing that I talk about I believe in both my books, but definitely in the first book. To make sacrifices like that we were just talking about, which I lost several relationships because of my trading and my career. My exes used to say, you love your work, more than you don't love me, you love your work. And to a certain extent, they had a point. It was my priority. It truly was my priority. And so what I believe is,
but there's nothing wrong with that, though. Either.
No, nothing. There's nothing wrong with that at all. Everybody has the right to be happy and to pursue what they feel they need to do. It was my priority. That was my priority at the time. In the long run, it became a great decision because I was able to reach my dreams, and I've got a wonderful daughter and a wife, and everything's great because I can provide for them and retire, and all that's great. I mean, it may not turn out that way, but again, your passion and your priorities may not necessarily be aligned. Now, what you were saying was making the decision and making that choice. Same thing when we talk about sacrifice. It's the same thing when you become a stock trader where, okay, am I going to be a trader or am I going to day trade? Am I going to be a long-term investor? Which one am I going to do here? Because you're not going to be good at all of them. So what happens is, someone starts off as a short-term trader, and then the stock goes down, and then now they're an intermediate-term investor because they don't want to sell it. And stock goes down a little bit more, and then they're a long-term investor because they're going to hold it for the long term. They morph it, but really. You have to be able to sacrifice. So there's several levels of sacrifice. There's that bigger picture sacrifice, and then when you start trading, there's the smaller level sacrifice where you have to now start to give up something to be really good at an area and to master an area because you're not going to be good at everything.
One of the things that I like about your work is, regardless of style, and frankly, I might write about different styles of trading. But the basics, the big pictures, for example, you have these kind of 4 steps, like looking at the entry mechanism. How are you going to deal with risk? How are you going to lock in profit? How are you going to position size? These are the concepts. I don't care what you think your style is. These concepts are where you have to stand. You have to stand on those concepts where it doesn't make a difference what your style is.
What I tried to do from day one, and another reason why I was able to weather all those years is because I believed that what I was doing was timeless. I really truly believed in what I was doing. I believed that I was in the right direction and I had to master it, and I believed it was timeless, and I still believe it's timeless, and I know it's timeless, that these principles are all, they're going to be around forever, because it's just based on the law of supply and demand, based on human nature. Yes, these are timeless things that you have to have. They're the fundamental foundations that you have to have in any endeavor. But in the newest book, I'm more specific of actually giving some practical ways of applying it to trading and showing, okay, do this is what you want to look for, and being a little more, in chronological order, exactly what to look for.
Let me let you put your best professor hat on. And I'm sort of reaching in different places here and not necessarily in a linear order, but I really love this one diagram that you had, multiple diagrams, but this one that caught my eye that I really like, which was your trading triangle. And for the audience out there, just to imagine a triangle, and in the middle of that triangle, it says edge. On the left-hand side, it says average gain. On the right-hand side, it says average loss. On the bottom, it says batting average. Professor, the floor is yours. Explain that to the audience. Of course, plenty of people in the audience are going to know exactly what it means or where it's going and can deduce pretty quickly, but others might not. And I think it's very useful, very instructive.
Sure. Well, you'd be surprised at how many people who are in the market that don't really understand that trading triangle, or, having an edge and with your gain and your loss and your what we call your batting average, which would be your percentage of winning trades. So, basically the holy grail in speculation is simply your percentage of winning trades divided by your losing trades times how many times you're going to win, right? So basically how much you make, how much you lose, and how many times you can be right versus wrong, and then how many times you can do it over and over. So that's the trading triangle, is your average gain, your average loss, and your batting average, or your percentage of wins. So it's just, at the end of the day, it's just a net of that. You're going to take however many trades, whether it's over a year, a lifetime, and you're going to figure out what you gained on average, what you lost on average, and how many times you did it, and how big the position sizes were, and that's going to be your net result, which I call your personal bell curve. If you just take all your trades and you were to put them on a bell curve, you could do it in a spreadsheet, you'll see everything distribute. And then if that curve is skewed to the right, where it means that it's not perfectly balanced from the middle to the edges. If it's skewed to the right, you're profitable. If it's skewed to the left, you're not profitable. So the more you can skew that curve to the right, the more profitable you're going to be. So, but this is just the very beginning. And when we do these workshops, I usually ask for a raise of hands of how many people right now know their average gain, their average loss, and the percentage of winning trades. Raise your hand. Usually out of 100 people, we get 8, 10, 12 people. That's 8 to 12%. 90% of the people don't even know their average gain, their average loss. So I say, okay, well then how do you know where to cut your loss if you don't know where your gains are? I mean, where are you cutting your loss? I'll just point to somebody. Where do you cut your loss? Oh, I cut my loss at 8%. Really? What's your average gain? I'm not sure. Well, maybe your average gain is 4%. I mean, you'd be a losing trader if you're cutting it at 8%. So how would you know where to cut your loss? So the whole idea of the loss has to be based on a function of the expected gain and how many times you can expect that to happen. That's basically, as you said, the professor, or the science behind it.
If you ask another question to the audience, your audience, what percent risked on each trade, I'm sure that answer also is just as unpredictable and probably not as thought out as well.
Yeah, that's even more foggy. Okay, when you start getting into that, it gets even more foggy. The correct amount or bet size, as we would call it, that would be something that is another very popular question or misconception that people ask me very often. What's the position sizing? I've gotten so many emails and so many comments on Twitter that people are real happy that I tackled the position sizing question in the new book.
I've seen that risk percent question. Smart people immediately raise their hand, say 10%.
Yeah.
I mean, that 10% is, everyone, if they're just thinking about it objectively and logically for just a few moments, If you say 10%, even if you're a smart person, you say 10%, and then you rethink that answer. Oh, wow, hold on. A couple dice rolls in the wrong way, and I'm basically broke.
Yeah, well, depending on your position size. I mean, if your position size is really small, you could take larger losses, and it would take longer time for which would be your risk of ruin. How many trades you can do before you would take a big loss. That's your risk of ruin. There's certain guidelines around that, but just purely from a standpoint of how losses work, the science of losses and the math behind them, once you start getting down to 10%, you start working geometrically against yourself, and the loss gets exponentially larger. So, or the amount to recover. So, a 10% loss takes an 11% gain to get even. A 5% loss takes a 5.26% gain to get even. So, at 5% loss, you're just about even. When you get to 10, now you've given up 1%, and as you go down, of course, you get on to 50%. It takes 100% gain to get even, and as it gets worse, it gets worse and worse. There is an absolute level that you really kind of need to stay above, and I found that level is the 10% level. I very rarely ever will go to 10%. 8% is pretty much my cap, but I'm a swing trader, and so that's what the gains makes mathematical sense to allow for.
The trading triangle really is a different way of thinking about a system. Obviously, you're a system guy. I love a great line that you have in the book: avoid the audible. Right? It's so simple. It's such a great one-liner, because when you say avoid the audible, I mean, in many ways, you are just taking a sword and just lancing so much of modern Wall Street, so much of modern media, just with 3 words: avoid the audible.
Well, of course, we know, an audible is, in football terms, that would be when, there's that option to make a last-minute play call when you see the defense shift or something, and the play that you went in with isn't maybe good anymore. So, but with trading, it very rarely is a good decision to call an audible, especially if you're new. So that would mean that, you're sitting there and all of a sudden maybe something comes on TV and you hear, who knows, Kramer or somebody talk about it, stock, and it starts moving, and you go, oh, I got to buy some of that, and you jump on and you just buy it with a knee-jerk reaction because you heard a rumor or a tip. That's certainly not systematic, and I've never seen anybody that can really sustain any kind of real profitability doing that type of trading. I myself almost never call an audible, and I've been doing this for 33 years. I'm prepared from the night before. That morning, I set up what I'm looking at. I know what I'm going to be trading, and then I have a list of stocks that I'm looking at that could meet my criteria. Maybe, that wasn't at the forefront of my list at the beginning of the day, and it starts to shape up, but I've already got it all laid out, and I know what I'm looking for and what I'm looking at and where my price points are going to have to be to be able to get involved and also to get out at a loss. That's all predetermined. So I'm not making any knee-jerk reactions, and I found that if I go back and look at a lot of my blunders, they were making those quick knee-jerk reactions and calling an audible.
One of the things that is so accepted, and of course accepted for good reason because it's true to an extent, diversification, the only free lunch. I love where you go with that, though, because I think people are notorious for this in this day and age. You have got something called Di-worsification. There's a point in time where diversification ceases to become diversification, and it becomes something else. For those people out there that want to sit there at the cockpit and track 5,000 issues every day or something like that, just for a number, speak to them and speak to Di-worsification.
There's a few things about diversification. Just to let you know, I'll give you where it started. So diversification started off as a term that was when a company, like for instance McDonald's, they serve hamburgers, fries, and shakes, and then they add a salad, and then they add other meals, and then after a while, the sales aren't doing very well, and they start adding items that probably shouldn't be on the menu. And that's when things are going to turn bad, when a business starts getting away from their core business and they start doing things, and they say they're diversifying, diversifying their portfolio, diversifying their business, diversifying their menu, and it turns into Di-worsification, where it actually ends up hurting them. Same thing with trading. There's an optimal, this is all math. It all comes down to a lot of math. When you're talking about risk versus reward, when you're talking about position sizing, your gains versus your losses, all that stuff, it's all math. There's an optimal diversification point. There's an optimal position size. If somebody who's really interested in this and wants to get scientific about it can look up optimal F or the Kelly formula. And basically, if you know your average gain and you knew your batting average, what a decent estimate of what you could expect that gain to happen on average and how many times, you would know exactly what is your optimal bet size that would yield you the highest return. It's not necessarily the largest bet size or the smallest bet size. Another thing too is you're not going to be able to track hundreds of names or even 30 or 40 names and really know much about them. And the other problem is that there's only a handful of really, really great situations at any one time. If you try to get too diversified, you're probably going to not be in the better names. And if you can't find the better names, well then maybe it's not time to be in the market. Maybe it's time to sit back and to wait. But that's another issue, being patient.
You brought up Optimal F, and I should give the shout out to Ralph Vence, the author of, who has been on this show. And Ralph's a fun guy, really interesting guy. Respect his work. I tell you what, though, you've given the audience a place to go for reading. They better strap on their mathematics cap, huh?
Yeah, I know Ralph Vence. I know of him, of course, and I have his book. And you can really get. They say if you torture numbers long enough, they'll tell you anything you want to hear. So you have to be a little careful that you don't start getting into and become a number junkie and start trying to back test or curve fit and try to make math tell you what you want to hear. You got to do just the opposite. You have to take what you're doing and then apply the math to it and see if what you're doing is making sense mathematically and profitably, not the opposite. So you don't want to back into the math. You want to use the math, and then you want to let that math make its way, that spreadsheet make its way into your trading. This is what really makes the difference for people, is when they're doing their trading and then they're sitting there and they're contemplating taking a loss or holding it longer, and they start to think, you know what, right now I'm at a 7% loss, and my average gain is 6, so I'm actually underwater here. I got to sell this thing. And you let the spreadsheet make its way into your trading, and you start thinking in terms of your personal bell curve, and all that stuff is what I talk about on how it's not just important for you to know this math, it's important for you to actually let it make its way into your trading.
Simple and robust is not a lack of sophistication. So many people will think simple or robust. It's not sophisticated enough. Quite the opposite.
The most powerful things are the simplest and most straightforward. You want to be a lacer. Sophistication and simplicity. Sometimes simplicity is very sophisticated. It's much more difficult to take a few principles and make them work and be disciplined than it is to throw everything against the wall and wait for something to stick. But that's never going to work, because there's always something that's going to work. There's something that's not going to work. But when you really narrow it down, and you narrow it down to a few variables, well, now it takes time to wait for those things to set up. It takes discipline and patience, and then it takes the expertise to know when the criteria is being met and really step on the gas. So, that's another thing. With the difference between traders that do really well and traders that don't do well is the traders that are do really well and get great results know when to gas it. They know when to get aggressive. They know when to sit back. And they're not just trying to trade just for the sake of action. They actually have a method behind it, and they're stepping on the gas when they're supposed to.
Mark, great stuff. We could talk all day. There's a lot of detail here. People are going to have to go do some reading. I'm not just going to be an Audible book for them, so they're going to have to go do some homework. The book is Think and Trade Like a Champion: The Secrets, Rules, and Blunt Truths of a Stock Market Wizard. Mark, beyond Amazon, which is a great place to go because I keep seeing it across the best-selling lists, where else can people go to check you out and connect with you?
course, I'm on Twitter, and then of course they could just go to my website, of course, at minervini.com. But that's pretty much the only place that with social media, I'm just on Twitter, but I'm on there pretty much every day. So that's where they can connect.
Good stuff. It's funny. Sometimes you get into these conversations, then you look up and you realize, wow, where did time go? Just boom, right there, right?
Yeah, I feel like we just covered so little, but I know we covered a lot. But we also there's so I can go on and on this for for days.
Mark, it's good chatting. There's going to be a book 3. There's always a book 3 after book 2. That's just the way the numbers work, right?
Yeah, it probably won't be on stocks, though. I'm probably going to do a book just on a winning attitude and being able to develop those certain technologies to get the championship mindset. But that's something that I've been working on also for a while. But I just want to say, and I'm not blowing smoke because I've never told anybody this before, but you're an excellent interviewer. It's really a pleasure, and you're really great. You should have a TV show or something.
Mark, I appreciate it. Maybe one day. Right now I like the idea of being a free agent. It looks like those people on TV do a lot of work, right? I just get to talk with you, and then I get to go have a normal life after I talk with you.
I know it's great though, but the questions are great, and it's the conversation was really awesome.
Mark, I appreciate it. Till next time.
Yep. Thank you. Appreciate it.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.